Support and resistance did not work for me until I uncovered this one little trick. Now, again, if you guys have kind of been drawing supply and demand zones, not having too much success, there might be a reason behind that. So a lot of times when we're looking to scalp, especially when we're looking to play these futures, I have the ES chart pulled up. That's exactly what we're going to be looking at. But in this video, I want to give you guys a little bit of a method and a little bit of a rhyme to your reason to kind of make money with supply and demand, or support, resistance, whatever it is that you want to call it, so that it's more beneficial and easier to understand for you. Now, again, make sure your assumed risk is always under control. You don't want to be over leveraged or oversized and sitting through some of these swings, because again, when you are playing supply and demand zones, a lot of times you're going to have to sit through these waves before you can actually, either cash out for a win or for a loss. So the number one thing that I realized, okay, let's say, for example, it doesn't really matter what time frame you're playing. If you're scalping the 1 minute or the 2 minute or the 5 minute or the 3 minute, doesn't really matter. But a lot of times when people are creating supply and demand zones or support and resistance zones, they're using these 1 minute charts, and only looking at 1 day's worth of data or 2 days worth of data. And they're kind of putting all of these lines all over their charts. And then, the price action breaks through, stops you out, comes back down, goes in the favor that you thought it was going to go in, so forth and so forth. So what really changed scalping for me is opening it up and using bigger time frames. So what I'm doing here, this chart that you're looking at is the ES futures chart. It's a 1 hour chart, 20-day chart. Okay, so there's going to be 20 days worth of price action on this chart in the 1 hour time frame. And what I'm going to quickly do is mark out the highs, right? So if I'm going back 20 days, I want to know what the absolute high was, 46.33 on the ES. So automatically what I'm going to do is create a top supply zone. The next area that was acting as resistance was here. If we kind of look going back about 2 Fridays ago, you can see acted as an area of support back here, gapped down, acted as resistance here. So this whole zone here is also correlating with your 200 SMA. This is going to be another supply zone. So what that's going to tell you is that when price action comes into these zones, you're going to be looking to do something, whether that's looking to short back down or looking to go long once we break through and back test out. Again, if you look at this prior support here, at one point in time, this box that I'm going over here was green until we lost this area. So as soon as you lose a prior demand or support area, it's going to turn into resistance. So all we're looking to do with these resistance and these support areas is get into or think about what moves are going to happen next. So what we want to do is be prepared. So then what we want to do is, I couldn't find any more support on the actual 1 hour time frame, so I had to go to the daily chart, and I'm going to pull up the daily chart here, and you're going to see the reason why I've got this bottom demand zone. So if I kind of scroll out here, look at the last time that we actually made a new high and then back tested an area where we held, right? So if we go back around 2 months now, you can see here 626, you can also see here 627. This area acted as an area of support. So the support area for us is on the ES is going to be 4360 all the way up to 4388. So that whole zone is going to be something that we're going to be looking at. Again, when you're playing these zones, you're not going to be playing them off the 1 hour or the daily or the 15 minute. We're going to go down to either the 2 minute or the 5 minute. And then from there, we're going to go ahead and take a look. So you notice we've got a lot more gaps in this area. So what are we looking to do when we're looking to scalp? For example, if I was to zoom in on this price action here, going back to this week on Tuesday, you can see this whole prior zone here that was lost. And now when this zone was lost, for example, when we closed below this zone on a 5 minute time frame, this was 7 a.m. on Tuesday, we closed below this zone, we would be looking for a confirmation. Now what essentially would we be looking for? Now when we put in a new low, are we just looking to take the scalp and take your profits on the way down? That's more than okay. you know, if you comes back in this area and starts to, you know, break even or puts you in a little bit of a drawdown, it's also okay. You can see here that we're in a 15-point range. Again, you have to let these moves kind of digest. You have to let them kind of pan out. So essentially what we would be looking for here is not to try to nitpick, okay, is not to try to nitpick where the stock or the index is going to particularly stop. We're not trying to just time it for, you know, 1 or 2 points. We're trying to look to get out of the zone. And as you can see, it gets out of this zone here, right? Puts in a low. What does it do after it puts in the new low? Back test the zone. And then what does it do after that? Starts to its continued move to the downside. So you can see once you break one of these bigger time frame zones, you can go ahead and do one of two things. You can get in on the confirmation 5-minute candle, 2-minute candle, whatever that closes below the zone, and then just kind of ride it out. Or you can wait for it to back test the zone and then start to fall. So if we back test and we don't get out of this zone and we start to fall here, what you can do at that point in time is just get along for the ride. And all of this little up and down and up and down and up and down movement should not concern you. This is our stop loss here. So if we break out of this zone and we come back in, back test it, hold and push out, plays over. So this is how you can really use support and resistance to kind of catch these bigger waves here. So instead of worried about all the little small imperfections and ups and downs on a day in and day out basis, you can essentially just ride your trades into the next support. Now again, the next support that we have is not sitting down here until around the 43.80s. Do we get there is still yet to be determined. But what you can also do once you start to break these zones is start to create a little bit of a trend line, right? So we can do a trend line and we can just add multiple touch points to our trend lines here. And we can see that essentially we've been just down trending this whole range, right? So if we do break down below the 43.99 area, we're more than likely going to come test this bottom support system down here. So again, you can do the same thing to the upside here. So you can also draw a short-term trend line if you're looking for a short-term scalp. So for example, this here would create a little bit of a channel. So if we break this channel, which again, I don't like to use too many trend lines because of the fact that, look at my 20 SMA. If we get a break over the 20 SMA and then we kind of back test it and then push higher, I would look for that. But again, some people don't like to have too many indicators on their screen, or they like to draw their own indicators. So what essentially we would be looking for here is a multiple touch point trend line. And we would draw these trend lines, and if price action breaks over the trend line, back test it, then we can now use that trend line as a hard support, and we can play it back up to the upside, and we would be looking to play this into an area of supply. So that first area of supply would be your 200 period moving average, which is here, or we would look to play it into the previous zone that we lost. So this is a way that you can start to play these support and resistances. And it wasn't until I started looking at bigger time frames and started to mark out zones on my bigger time frames and then look to scalp on the smaller time frames is what really made me a lot more consistent, because now I wasn't so worried about each and every candlestick uptick and downtick and uptick and downtick. I could focus on the overall move and the overall flow of the market. And even if I didn't have the most picture perfect entry, I could still get in on the move and make a little bit of money as long as my risk was manageable, right? Then that's the number one thing. We're not going to enter into this move where we're going to have to sit through these waves and go 20, 30, 40 mini contracts deep. Take 2, 3, 4 micro contracts, allow the play to kind of work out, give yourselves a little bit of time and mark out your big levels. So what I want all of you guys to do, and that you guys could start implementing, go to a 1 hour and 4 hour time frame. We want to find highs, we want to find lows, and we want to start marking out these zones. As we have a few of these zones, and I would at least go back 10, 20 days worth of data, right? So on your chart, at least look at a full body of work of 10 to 20 days. That's going to give you 2, 3 weeks of previous price action. From there, mark those zones out and then look to play those waves intraday on your smaller time frames. So for example, if I take a couple of these trend lines off and I look at, right, if I look at the 2-minute chart, we might see a little something different where there was a potential other move, right? So for example, if we go to the 2-minute time frame chart here, and we just look at this week's data again from Tuesday, once we lost this zone, okay, once we lost this whole zone here, we close below it, we back test it, and then we essentially just come all the way down. So even though these are big swings in the market here, realistically, it's not a big move on a macro intraday level here, right? We lost one level of support, now has acted as resistance, which gets turned into a supply zone, and we would be looking to trade back down into the next level of support, right? So as we come into this level of support here, we would be looking to play it back out. We would want to see price action come inside the box here. We would want to see price action push out, back test it, and then that second move is the move that we know we want to be long on. It's the same thing if we break to the upside. If we break to the upside, we want to come out of this zone. We want price action to come back into this big, large time frame zone, and then we want it to stall, and then we want it to push out again. It would be that second time is when you want to get in on that wave, and you want to really play it into the next zone. That's how you scalp, and that's how you play these support and resistances. You use big time frames, bigger zones, because again, these zones that come off the 1 hour, the 4 hour, the daily chart are going to be a lot more strong than marking out a bunch of little supply and demand zones on a 2-minute or a 1-minute chart. Those aren't really going to hold enough weight. Price action is going to break through. It's going to come back down. It's going to stop you out. It's going to give you all sorts of head fakes. When you're looking at these bigger zones like this, you can get a much cleaner and clearer picture. Okay. So for example, look at the last time we came up to the top zone. We came up to the top zone here, right? And we'll make sure you guys can see this. So we came into this top zone here, got rejected, failed to confirm and come out the top side. And when we really lost it, you could have used this whole zone as a stop loss and essentially looked at the bigger time frame, right? Just allow the trade to work out. Let it drop, let it bounce, let it drop, let it bounce, let it drop, let it bounce, let it drop, let it bounce. But guess what's happening? This price action here is all taking place over a 2-hour time frame. So what that means is even though we're playing a big zone here that's coming from hourly charts, 4-hour charts, and daily charts, this whole move down would have not even worried you on any uptick or downtick going against you in your favor, because you're short here at this resistance level, and all you're looking to do is play it into the next current demand zone. You can see here at this point in time, it was acting as a piece of demand. We came to the bottom of the demand. We kind of bounced up a little bit, failed to get out and break the previous high. So this has to tell you that we're still under this supply zone here. The 200 SMA is kind of weighting us down. And then once we really get out, right? Once we really get out of this box here, we never really make any sort of attempt to push to the next supply zone. So if you just kind of follow the price action along here, you can see that we just kind of trade with inside this range, right? 1 top here, 2 top here, 3 top here, 4 top here before the gap down, and now we finally started the cycle down. Okay, so again, when you're trading with inside of a zone like this, and even though we're trading, you know, if you look at the ES, this is about a 20-point range here. Even though we're trading with inside this range, we never really get out of here, and we never really start to build, right, into the next supply zone. So when we never really start to build into the next supply zone, you have to be thinking move back down. When you do get a little bit of a range bound trade like this, where for 2 days you're kind of just essentially going sideways, we would be looking to sell at the top of the range, trade to the bottom of the range. We would be looking to buy at the bottom of the range, trade to the top of the range. Sell at the top of the range, buy at the bottom of the range, until we start to lose the bottom of the range and then back test it and then get rejected. And once we get rejected, then we want to play that big macro move to the downside. But this is what you would consider range trading. Sell, buy, sell, buy until we break through, and then look for the retest and follow through. I hope this helps you guys. Again, use bigger time frames for your supply and resistance zones. Again, use a 2-minute, 5-minute chart to kind of scalp these zones, and it's going to unlock the doors to being a lot more profitable, a lot more comfortable, and a lot more consistent when it comes to scalping the futures, whether you're playing ES or you're playing NQ, or you're playing RTY, or you're playing US 30, or you're playing crude oil. Doesn't really matter. It's going to work on any instrument. You guys could be trading stocks, options, Forex, doesn't really matter. Hope this video helps you guys. If you guys want more training, you guys want to get into the Discord with all of the other study lessons and the guides, and you guys are looking for the intraday technicals and watch list and live trading, all that stuff, one-on-one coaching I also offer as well. Make sure you become a lifetime member to evolutiontraders.com, and I'll see all of you guys on the inside.